Hello traders, Gary Wagner here just after 10:30 in Honolulu, 4:30 in New York on Wednesday, the 10th day of September 2014, and this is the daily report for gold and silver. We have a continuation in terms of pressure in the precious metals markets, with them trading lower across the board. First to gold, current screen print 1249.37. It has had a low today of 43.90 and a high of 57.40. Silver also trading lower, off about 10 cents on the day. The low today 18.88 and the high 19.01. Current print 18.94. We do have both the equities markets as well as the dollar trading higher this morning, with the Dow Jones Industrial Average up about 54 points at 1768.71. The S&P 1994.80. And that is also higher on the day. Dollar up about 11 points at 84.25. So traders, we have been talking about lower pricing over the last week, ever since really we broke through 1280. 1280 to me was a pretty critical level. Market continued to drift lower. I wanted to see really if we could in any way hold this 1261 level. That, of course, was to be uneventful as the market slid through there. We've talked about it. We did actually put out a formal sell signal for those that did not go short in the market on their own. This was our recommendation. We did put that out today. As you can see, when we look at the dollar, although the dollar had shown a little bit of weakness yesterday as the market came up, we talked about the fact that even with this red candle, we have seen this before. Here, we've seen it here. So what we're getting is small retracements, a clip up, small down day, sizable move up, small down day, and so forth. So today we have seen the dollar begin to move back higher, but it still has not taken out this 84.50, this top right here in the market. And we'll have to see how that acts out over the next couple of days. Really the same thing with the equities markets. Equities markets, you can see, hit this high. I believe that this high was somewhere right around 2010, still at 1995, so it is still below 2000 on the S&P, but you can see that it did find some support. It did hit a new low today, but managed to close higher on the day, and now still needs to take out this 2010. So where does that leave gold and silver? Well, there's one thing that we can definitely say, and that is we've seen this inverse relationship between the dollar, which has been moving higher, the equities markets, which has been moving higher, silver lower, and gold lower. We've gotten this negative correlation between these four markets, and we believe that we will probably see a continuation. The key to me was the fact that over the last 2 days, we were unable to even come close to finding any kind of support at 61. That has led me to believe that now that we are below this point right in here, trading roughly at 1249 right now, all things being equal, and under the assumption that we'll probably see the dollar continue to move higher, as well as the equities markets continue to move higher, we'll probably see the metals under some more pressure. That being said, our next real target for gold right now has got to be about 1230. 1230 is a 76% retracement, and it is a retracement from a much larger rally, the rally which began really at the end of 2013, call it the middle of December. We've got this bottom here, and then of course this bottom here. But this rally itself was a good $200 rally. And when we consider this kind of a sizable move and the fact that 76% of that would be given up at 1230, we are rather close. We're only about 19 points from there. But we've had this clear break below 1261. And as I said, this goes into the second day that we've seen it. This week, of course, as the market came below on Monday, Tuesday, today's trade right now. And so my sense is that what we're looking at is going to be a continuation of this lower pricing. Unlike other times where we found tentative support here and then watched the market move back up, or even attempt to move back up here, we've got no such activity over the last week, and we're seeing really a refined and defined trend to the downside, which I believe could easily continue. So what about silver right now? I purposely did not issue a sell recommendation in silver. I've simply drawn a line roughly at our lows that we have gotten over the last 2 trading days, just below $19 per ounce in silver. And here's my sense. If we see the equities markets begin and continue to rise, I should say, then we could in fact see that spill over because of the industrial component of silver into the price of silver. We've absolutely not seen that. We've been in a dramatic downtrend, but on a technical basis, we do have a reason to at least look for some support in this area. Unlike gold, which is, I believe, has no real technical support until about 1230, we really see an area right at around $19 that could in fact be supportive. Now, as I said yesterday, we did see it dip below this one area, and this, of course, is back in the end of May, beginning of June of this year. And we can look at June and July of the previous year is really the only times we saw this market dip below 19, but for the better part of this year and last year, it has maintained a price point above that. So because of that, I have put any kind of a sell signal on silver on the sidelines, waiting to see if it breaks through this area right here, because I believe that to be a fairly critical area for silver. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow on Thursday for another daily update and review. Bye-bye.